Welcome to stockmarketfunding.com. Welcome to the people in the training group right now, SMFMMTs. Welcome to other people on our other systems that are listening, and welcome to you too, who may view or not view this Amazon chart. Basically, what we're going to talk about here, folks, is that number one, let's start with the bearish side. Okay, the earnings had dropped the stock on Friday. They came back in, and there was a lot of short covering off of that bottom. So people that were shorting up in here on this last failure at resistance below that 20-week, that 10-week crossover is very bearish. This is a weekly MACD sell signal. And when I go into a weekly MACD sell signal, is that we have our own mathematical proprietary trend ratios developed over 25-year period, which is stockmarketfunding.com, populated by Mario. But let me tell you, one good thing about it is this, is that the bearish side is that you went from a 0.2 sell signal to a 0.5 and now to a minus 0.8. As long as this weekly number keeps going down in value, it has to increase the following week. It's got to go. So that's that weekly reading. We don't want to see where the weekly MACD sell signal stops. Next week on Monday, we'll see if we continue with those readings, and we'll use the daily as well. The percent DS, the only reason why it changed from 22 is the amount of short covering off the bottom in this wick, which can change these mathematical readings on. So basically, Amazon came crashing down here on its earnings support. What people were looking at in the community, in the bull community, was that the double bottom, this last bottom here, this bottom was on 627. The minute it hit there, there was a lot of people that were short the name were buying back. And then what happened was they were buying to cover, and people that were trying to short the down move got squeezed out. That's why you have the long weekly wick. And it was all done on this last Friday, which was yesterday. The 20-week is slightly starting to descend. When that happens mathematically here, that's at 127. As long as that number keeps falling there, that means that upward resistance will fail. The 10-week moving average, which is below the previous week, that was 121.4, is now at 120.45 reading. This continues to fall. This will start to come back down in here. Its current support level off of its earnings announcement, it's all volatility, short covering. We will look at this big down week bar prior to that earnings reversal back to that double bottom is that is at 114.20. Amazon has to close below both of these two weekly bars. If it does come down, that's the support level. It'll bounce up, but as long as there's not a closing price above that declining 10-week, which means that when you're declining, that's the resistance level. And the trend is weaker at resistance, meaning that there isn't any sustainable covering there as far as support. So basically, when you horizontal that out right there, what used to be the breakout over here, and that weekly support was broke, has become the new weekly resistance. So another thing about staying net short on the name is that you got to close below 119.48, and you have to keep descending here, and you have to keep dropping in the weekly. So if there's any volatility, it's going to roll right back over because the momentum will be extremely weak. It's a bearish bottom, and all of these things will end up playing its course. So when you look at this piece of it, that 50-week moving average, which is rising, even with the big down move, because it takes a while to turn, that's that resistance level. And that trend line that I just drew right here, the 10-week was tested all the way from bottom up to the test now, and we're below the closing price, which is bearish. So what we're going to look for in the upcoming week is that this happens right here for the shorts. Now, is that you got to close below 117.70, and 117.70 has to be a lower high at resistance within the trend structure, and that the closing price below 114, let's say 114, which is half of this bar right here, you've got to get a close below there, and that would become new resistance to come back down to the 106. The trend is very weak off of the bottom for all the reasons I just stated. Weekly sell signal, and if you don't understand a weekly sell signal and it's your first time watching what that would mean, hey, I can tell you it's very accurate. Watch this. Let's give you a definition. Back here, Amazon hit a weekly sell signal, went straight down, then it came up off the bottom. It hasn't seen that sell signal. The last time you had a weekly sell signal, I'll tell you when, the week of 9/28 of 2008. It came back to a buy signal, pal, on the week of 3/15 of 09 for the rally. Never has gone below there since. That means that when this is in that mode, if this don't change, the shorts have got it made. If it does start to change, it means that the bear, you would want to be getting long up and out of the money, because that means that the trend would not be as bearish as a short seller would want it. And it's and every time that you hit the 10-week, you undercut the 10-week, it declined in price. It's still declining slightly. There's no flattening out, but look it got below it. It tested the 10-week, zippity-doo-dah. Here, the earnings was last week on Amazon, and you kept falling in price, and you kept selling into resistance, and this is that trend structure, and Amazon has a bearish trend cycle, and I'm closing below 10-week and 50-week. And for the bulls, on the other hand, the bulls are going to want that support level to hold. They want a higher low to hold than coming back. And if the bulls are in it and it gets back below 114, they're done. And if 117 becomes new resistance next week without a failure to close above it, the bulls are done and the bears will be in control.